It's the end of the first quarter. I'm here today to talk to my colleague Monique Wong about the economy, investment performance here at Coutts and the markets more generally. As you know, a typical balanced fund, and at Coutts that's circa 50% equities, returned around 3.5% broadly, depending on the type of portfolio. Is that a good result?
3.5% is a very solid result for balanced portfolios. If we look at wealth manager surveys, it shows that we are running about a percentage point ahead of our competitors. Our growth portfolios have outpaced the FTSE 100, and defensive portfolios have beat cash rates and inflation. So it's great numbers, great performance, but we have to remember that we invest for the longer term.
Quite right. So one quarter is good, but we should expect, of course, negative quarters along the way. So what were the key drivers to that really good return of 3.5% on a balanced portfolio? And it's really pleasing to hear that growth portfolios outperformed the FTSE.
The clear winner was emerging markets, which were up 10% in the first quarter. Now, this is the asset class that suffered most in the Trump election and his protectionist talk. But the market's coming round to the idea that the new president isn't able to implement his policies quickly or in the extreme format. Yes, there were things that also didn't work. Largely, it was the broad commodity base, apart from gold. It had a lackluster quarter. The oil price took a 6% breather after a 100% rise from the lows in 2016. Currency didn't have much of an impact on performance this quarter because sterling largely traded sideways.
Yeah, that's a good point, because last year, of course, our sterling-based clients saw some spectacular returns because of sterling depreciation. Okay, so turning to some of the themes of the portfolio, what are the themes and did they work?
Some of our investment themes worked very well. European equities for starters, which we have had to be very patient on. But the European economy is growing and European companies are showing positive earnings growth for the first time in 5 years. So good macro fundamentals and good company fundamentals. So imagine where it would be if we didn't have political uncertainty.
Yes.
Also, a couple of our sector themes are working well, healthcare and technology on the back of good earnings reports. And on the fixed income side, our favorite financial credit position is performing well. Several of the European laggard banks have raised capital, notably Deutsche Bank and the Italian Unicredit. And what this means is that banks are better able to withstand a severe downturn, and there is stronger backing for the 6% coupon that they pay.
So in financial credit, we're a bond holder rather than an equity holder. So when these banks go and raise equity, it's great news for us. It makes the bank safer in simple terms. Okay, that makes a great deal of sense. Did we do much in terms of asset allocation?
We did make one major asset allocation change. We bought into emerging market local currency debt.
So on the debt side of emerging markets this time, right?
That's correct. It was largely or effectively an anti-Trump protectionist rhetoric trade.
Yes.
And we are taking the risk from Mexican peso to dollars, not Mexican peso to sterling. Broadly, emerging markets are recovering. They're coming out of recession. Inflation and interest rates coming down. There's an attractive 6% coupon. So in terms of our investment principles, it ticks the boxes on macro, value, and contrarian.
Right, I like the contrarian aspect, the anti-Trump rhetoric, although he has gone quieter about emerging markets and Mexico and the likes, and of course in April he is visiting China. Okay, and just to be clear, because many of our clients will know that we're buyers of sterling, and as you mentioned, you structured this particular asset allocation in a clever way. So rather than trading effectively sterling versus the Mexican peso, it's the dollar versus the Mexican peso.
That is correct. We are taking emerging market currency risk, but only to the dollar, not from Mexican peso to sterling.
Good. So we're maintaining our view of being buyers of sterling, thinking Brexit is somewhat overdone in respect of the currency.
Indeed.
Okay, so thank you, Monique. That's a good quarter for Coutts clients in terms of investment performance. It sounds like across the board, that's defensive to growth mandates. We'll come back at the end of the second quarter and report again.